This content is for educational purposes only and is not financial advice. Any results shown are illustrative, not a promise or guarantee of similar outcomes, and individual results vary. Options trading involves high risk of loss. If you day trade SPX options, one of the biggest challenges is knowing exactly when to enter, where to place your stop loss, and where to take profits without guessing. In this video, we break down a complete rules-based SPX 0DTE options trading strategy using the day trading GPS SPX daily key levels indicator and ribbon indicator. You'll see how objective key levels, market structure analysis, entry confirmation, predefined profit targets, and structured trade management work together within a repeatable trading framework. 1 SPX 0DTE option trade. $2,060 profit per option contract in less than 30 minutes. But the important part isn't the dollar amount. The important part is that this trade came directly from a rules-based trading framework using two indicators: the Day Trading GPS SPX Daily Key Levels Indicator and the Day Trading GPS Ribbon Indicator. No guessing, no subjective trend lines, no trying to predict where the market might go. Just objective price levels, confirmation rules, predefined stop locations, and predefined profit targets. In today's video, we're going to walk through the exact setup, the signal that triggered the trade, the confirmation required for entry, and how the position was managed from entry to exit. Let's get started. At the close of the 9:36 a.m. candle, SPX closed below the bull-bear key price level for the session at 7532.93. At the same time, the ribbon indicator turned fully red, and the lower ribbon bands began separating away from the ribbon base, indicating bearish momentum expansion. That combination provided both the signal and the confirmation required for a bearish trade entry. Because the trade was triggered from the bull-bear key price level, the standard options selection process within the daily key levels framework called for using the option strike closest to that level, which was the 75.35 put option. The ask price at the close of the 9:36 a.m. candle was $17.90. By 9:58 a.m., that same option was worth $38.50. That's a gain of $2,060 per option contract in just 22 minutes. So how did we know where to enter, where to place the stop loss, and where to take profits? Let's break it down. To understand the trade, there are only two things you need to know. First, each morning before the market opens, the SPX Daily Key Levels Indicator automatically analyzes the SPX market and calculates a series of critical key price levels for today's trading session. At the first tick of the 9:30 a.m. open, it plots the key levels on your SPX chart. Second, every trade entry has two requirements. First, a candle close above or below one of the indicator's main key levels, and second, confirmation from the ribbon indicator. One of the most important main key levels generated each day is the bull-bear key price level, also known as the BBKPL. The BBKPL acts as a major decision point during the session. When price closes above it, the market is showing bullish strength. When price closes below it, the market is showing bearish strength. However, a candle close above or below a key level alone is never enough. Every trade entry also requires ribbon confirmation. For a bullish trade entry, price must close above a key level, and the ribbon indicator must confirm with an all-green ribbon. Ideally, the upper bands of the ribbon should be starting to separate from the ribbon base, showing momentum expansion. For a bearish trade entry, price must close below a key level, and the ribbon indicator must confirm with an all-red ribbon. Ideally, the lower bands should be pulling away from the ribbon base, showing momentum expansion. No ribbon confirmation, no trade. Now let's go back to today's setup. At the close of the 9:36 a.m. candle, SPX closed below the bull-bear key price level, while the ribbon turned fully red, and the lower bands of the ribbon began pulling away from the base of the ribbon. That provided both the signal and confirmation required for a bearish trade entry. For risk management, there were two stop-loss options available. The first was the tighter stop-loss using the QL level above the BBKPL at 7536.62. The second was the standard stop-loss using the first midpoint above BBKPL, the mid-BBKPLR1 level at 7540.32. The profit target framework is simple. Every trade begins by selecting one of three profit objectives. For a scalp trade, the target is a one-level move in your favor. For a regular day trade, the minimum objective is a 1.5 level move, while the preferred objective is a full 2-level move. In this example, the bearish entry occurred below the bull-bear key price level. That means the 1-level scalp target is the S1 level. The 1.5 level target is the mid-S1, S2 level, and the full 2-level target is the S2 level. Once price reaches your selected target, you have two trade management choices. The first option is to exit the entire position and lock in the full profit from the trade. The second option is to scale out. Many traders choose to close approximately 60 to 90% of the position at the initial target, securing the majority of the profit while keeping a smaller position open to participate in any continued trend movement. After taking partial profits, the stop loss on the remaining contracts is adjusted to break even or better, creating a de-risked runner position. If the trend continues and the ribbon indicator remains aligned with the direction of the trade, the remaining position can be managed level by level. As price reaches additional key levels, traders can continue taking profits while progressively raising the stop loss, locking in more of the open gains and reducing risk as the move develops. The objective is to let the market determine how much of the trend you ultimately capture while maintaining predefined risk management rules throughout the trade. To illustrate the framework, this session ultimately reached each of the 3 initial target levels, allowing us to compare how the scalp target, the minimum regular day trade target, and the ideal regular day trade target would have performed. The 1-level scalp target at S1 was reached during the 9:42 a.m. candle. At the close of that candle, the option's bid price had increased from $17.90 at entry to $24.20, representing a gain of approximately $630 per option contract. The 1.5 level target at the mid S1 S2 level was reached during the 9:46 a.m. candle. At that point, the option's bid price had advanced to $29.60, resulting in a gain of approximately $1,170 per option contract. The full 2-level target at S2 was reached during the 9:58 a.m. candle. By the close of that candle, the option's bid price had reached $38.50, producing a gain of approximately $2,060 per option contract. The important point is not the dollar amount. The important point is that each profit objective was defined before the trade was entered. The purpose of the framework is not to predict how far any individual move might extend. The purpose is to identify objective entry levels, define objective profit targets, manage risk according to predefined rules, and then react to price action as it develops throughout the trading session. In this example, the key levels provided the profit target framework, the ribbon indicator provided trend confirmation, and the trade was managed according to predefined rules rather than emotion, opinion, or prediction. The market ultimately reached all 3 initial target levels. In other sessions, price may only reach the scalp target, the minimum regular day trade target, or potentially extend well beyond the ideal 2-level target objective. The key advantage of the framework is that traders know their entry criteria, profit objectives, risk parameters, and trade management plan before the trade is ever entered. And the key takeaways: the entry signal came from a close below one of the indicator's key levels for the session, in this case, the bull-bear key price level. The confirmation trigger for entering the trade came from the ribbon indicator. The stop-loss locations, profit targets, and trade management rules were all predefined before the trade was entered. The framework remains the same whether the market is bullish, bearish, trending, or range-bound. The goal is not to predict where the market might go, it's to react to price action and follow a repeatable process built around objective price levels, confirmation signals, rule-based entries, and structured trade management. That's exactly what the SPX Daily Key Levels Indicator and Ribbon Indicator were designed to provide. If you'd like to learn more, you'll find additional videos linked in the description below covering the complete Daily Key Levels framework, including support and resistance key levels, contextual key levels, daily market structure analysis, option strike selection techniques, profit target methodology, and advanced trade management rules. Those videos also explain in greater detail how to adjust stop losses as a trade progresses, scale out of positions, and manage runner positions when the market continues beyond the strategy's initial target objectives. For example, while today's trade reached the ideal 2-level target at the S2 level by 9:58 a.m., the bearish move ultimately extended 2 additional key levels to the S4 level by the close of the 12:42 p.m. candle. At that point, the 75.35 strike put option was at $89.60 on the bid. That represents a profit of $7,170 per option contract on any remaining de-risked runner position held beyond the initial target objectives. Those advanced trade management techniques are covered in detail in the videos linked in the description below. For traders who prefer using lower-cost alternatives to using at-the-money SPX options, those videos also explain how to select appropriate out-of-the-money option strikes as well as lotto option strikes for both bullish and bearish trade setups. There is also a separate features overview video that walks through many of the advanced capabilities built into the SPX Daily Key Levels Indicator, including historical review tools, customization options, market structure analysis, and additional functionality that we did not cover in today's trade breakdown. Thank you for taking the time to watch today's video. If you found the content helpful, please click the like button and subscribe to the channel so you'll be notified when future videos are released. If you're interested in either purchasing the SPX Daily Key Levels Indicator or our SPX Suite, which also includes the Ribbon Indicator, go to daytradinggps.com. To request a discount promo code, email us at daytradinggps@gmail.com. For those interested in seeing how other traders are using the indicators and the Daily Key Levels trading framework, here are some reviews and feedback we have received from customers who have purchased and used the indicators. You can view additional customer reviews and feedback at daytradinggps.com. Thank you again for watching.